All right, you are welcome back to the channel. As a beginner trader, sometimes you can be overwhelmed about indicators and then what particular indicator you need to use to be able to trade profitably on the stock market. And as a beginner trader, you don't need to confuse yourself with so many indicators. There is one strategy that I'm going to reveal to you that you can use one, indicator to trade your options and make sure you run home with your profit. Now, what is that strategy? The strategy we want to look at is swing trading using the RSI. Okay? Swing trading, as I have said before, it is a trade that you enter into that goes beyond a day. You can hold it for days, for weeks. That one is not like the day trading where you enter for a trade the same day you exit. Swing trading, you carry it overnight and then it can be for days or it can be for weeks. Now, what then is RSI? RSI is Relative Strength Index. If you watch my graph here, you can see that we have a pinkish graph, a pinkish background with a graph running, almost going up with it. And here shows to us anytime that this indicator, RSI, rises to 70, then that stock is considered to be overbought. Now, the RSI works in ranges between 0 to 100. So when it goes beyond 70 or 70, it suggests that the stock has been running up and it's overbought and it is time for price to reverse. When it is below 30, as you can see here, all right, if it's below 30 here, then it is considered that stock has been oversold. So what happens? It will be finding its way, that is the suggestion, that it will be finding its way back, to the top. Now, as an options trader, when you see these indicators, it tells us that then it is time to either buy a call or buy a put, depending on where the indicator is. All right. So I want to look at how do we then trade in using the RSI in our swing trading. Number one is to find a stock. You must find a stock that has volatility. Remember, if you are buying a call and the RSI is 30 and you go and buy a call and you are saying that today is 28, you've bought the call as against 30th of August. And 30th of August, where you bought the option, the price is still, lying there. You may run into losses or you may make no profits. Okay, so you must trade stocks that are volatile. And by volatility, I mean prices, the price of the stock goes up and down. At least every day you should see some movement in the price of the stock. All right, so after you have picked your stock, what are you supposed to do? If you want to buy a call, maybe the RSI has gone all the way down to 30 or below, and you are planning to buy a call, then you must wait for it to get to that 30 or below. Then you go inside and buy your call. The other way is wait for it to hit 70 or above, you go inside and you buy your puts. Okay, now what do you do when you enter your trade? You have to be looking at how to protect yourself, and that is how to set your stop loss. And with stop loss, I would recommend, we call it risk to reward. If you are risking $1, then you should be targeting of making $2 and above. If you are risking $1 to make 1.5, that's no profit. Okay, risk to reward must be very good. 1:2 or 1:3. All right. So you set your stop loss at 1 and you are targeting to take your profit at 3, right? And then what must happen is that you should equally set up your targets, and that is your take profit. Because sometimes prices moves in a way that you may not be sitting there to be looking at how prices are moving, and then when you are making profit, then you exit. No, you can set your stop loss. You enter your trade, set your stop loss, and you are gone. When it hits your target, all you come to see is that profit has been recorded. You're not sitting down there watching charts all the time, watching prices, move all the time. No. Remember, there is no indicator that is foolproof. That means that there's no 100% correct indicator on the stock market. No. But this particular strategy, RSI, that is Relative Strength Index, is very straightforward for beginners to use because it only has these parameters that it must be between 70 and then 30, and you can easily understand it and use it in your swing trading. Right. So the last thing I want to say is that don't risk too much than you can afford to lose. You can use between 1 to 2% of your trading capital on your account. Okay. Now, if you have found any value in this video, don't forget to give it a like. Those who are new, subscribe to the channel. Those who are continuing people who are always here all the time, please don't forget to like the channel. Don't forget to like the video. And until we meet on the next video, I wish you the blessings of God. And I say stay trading and stay happy.